Hello and welcome to our weekly catch-up here at OPC. And obviously coming off the back of a decent inventory report last week, we also had reports out from the IEA. We also had the EIA's, the US agency's short-term oil market report. So a bunch of reports driving the price action, really all pretty bullish. That seems to be the mood in the energy markets at the moment, particularly with crude oil. We've got WTI trading above $71. So we had the 11th straight monthly drawdown on US inventories were reported last week by the EIA. We also had the Paris-based International Energy Agency calling on OPEC Plus to ramp up production. They're telling them OPEC needs to up its game and produce more because of the shortfall in the market. So lots of indicators really that the market remains quite tight and pricing is moving higher. So the upwards trend for oil remains intact. We're making new highs, and I think you've got to be looking potentially towards $75 on WTI over the course of the summer. Now, elsewhere in the market this week, not a huge amount out there, but a Federal Reserve meeting. So the FOMC meets on Tuesday. The statement is issued on Wednesday, and that is in the wake of last week's big CPI print, 5% headline CPI in May. 3.8% for the core reading, which strips out volatile prices like energy and food. That was the highest in 30 years. The month-on-month core increase was 0.7%. That's down from 0.9% the prior month, but nevertheless remains high. That's 7 cents on every dollar between April and May. And that does show that pricing pressures are not just because of base effects from last year. The pandemic, of course, was at its peak in an economic sense around this time last year, but it's not just base effects. Prices are sequentially rising month to month, so that is a worry for the Fed. But we know that the Fed is sticking to its guns on two fronts. One, employment, that's its main goal now. It wants to get the employment numbers back up, and inflation it sees as transitory. Now for now, the market believes that we've got 10-year treasury yields trading well below 1.5%. They hit a 3-month low last week despite that inflation number. And overall, the mood in the markets this morning is positive. European bourses at record highs, the DAX hitting a record high, the FTSE 100 hitting its highs since before the pandemic. So generally positive tone to risk assets as we start the week, but we're looking ahead to that FOMC statement on Wednesday, as well as the usual crude oil inventory stockpile numbers from the EIA this week as well. That's it from me for now. Thanks.